Uh, Good morning. In continuation of the previous points that I put here previously, that is yesterday, on the investments for the different category of the people, specifically the fixed income avenues that is required for the people. So, when you have some avenues, maybe the employees or the small business people like MSME, like small traders, everyone wants to keep some money for the future. That is the compounding effect on the time for the future, for their future needs like transactional motives, precautionary motives. So everyone thinks that we have some target keeping money in different pockets because we can't keep everything in one uh, asset. That is, if I have 10% of savings in a monthly income for a employed person, he or she may grow up as a family, having children, maybe 3 to 5 years. Then the things may be coming for their education and their other things in future. And technology has been developed a lot now. So everyone knows in 20 years, 25 years how much one can keep for their capital investments for the things like in housing, banks, post office, public provident fund, or mutual fund, of course the equity other than the bonds, where the equity does not give the fixed returns in the stock market. Of course, the equity gives somewhat the ownership in the company, either it is a private limited or public limited. The public limited company equity shareholders are transact freely in the stock market whenever they want. That is the form of business organization, sole trader, partnership, joint stock companies in India. So here the point is how to give my guaranteed returns on my investments. That comes when you get married. Nowadays the people are starting the profession or the job or an employment, mostly the private sector. We know very well last 15 to 20 years to 2.5 decades, uh, the governments, the local or the central governments, do not have that much employment. Of course, we have the Indian Railways, it's public sector banks, uh, UPSC staff selection. The percentage is the growing population. So that's the reason. The point is the people interested in the fixed income, maybe the short term or long term. We need to decide. That's why I said that you can't keep in one pocket. You have to keep in different pocket. That is, there is a saying in don't keep all eggs in one basket, because you need to take in different things. For this, we have different options available for the people. And depending on our income level, the tax structure, the direct tax structure also comes. You have to keep in mind that. Of course, we have two types of options available. Go for the old structure and new structure. New structure, if you are going for that one, up to 7.5 lakhs, there is a tax credit. After that, there won't be any tax. Of course, you can't take any saving options as per the Income Tax Act. So, if you are opting for the old one, when you submit your return, also you can amend. That is one case. But still, we can't keep more cash in our cash chest, either in the savings account or in the all the time in the public sector banks and private sector, where the single digit rate of interest that accrued investment. So that is the reason we have different other options that may be available. But one thing most of us do not know, direct or indirect, our branch banking system makes the flow of funds all over India easily. Once you deposit anywhere in Arunachal Pradesh or in Assam or Tamil Nadu or Karnataka or Rajasthan, anywhere, that money flows from the bank. So, restructuring of the banks as per the Basel 1, Basel 2, and so on is going on one side. That happened recently. So, here, when we need all these, we need to see the number one, what is the option that you are interested in. You have to keep in mind and think that how do you want to. You make a single person to the family, or nowadays people are working in double income groups are there, both wife and husband, doing the profession and earning. In that case, one income can be kept for the different purpose. Okay, whatever it is, single or double, depending on your income. The first priority that one can start when they start their career plan by 45 or 50, you need to have the corpus fund where you can draw. So when you need at the age of 45 to 50, when your children coming up for the higher education or marriage, either of these things may happen. Right? Of course, if your ancestral property is there, fixed assets, you can concentrate on the other things other than the house. Better you should have only one house. Okay? With that background, there is a permutation combination, there is an odd and fast rule all the time. Right? So here, there is an indicator for any country. Definitely, when we have the stable economy, political economy, things going smoother. Otherwise, certain issues that rise in a number of countries. Right? We know very well. So here, the first option, when the fixed income professionals or the employees wanted to keep, better keep in the public provident fund, either with the State Bank of India and any bank or post office. That keep it after 5 years, that is locked, you can draw it. So you can extend up to 25 years. Even the wife and husband can open separate account. Don't forget, any all tax purpose independent, not the group as wife and husband together. Right? Number one. Number two, go for some insurance policy. It covers the risk of the family. So you have the life insurance, mediclaims policies. You can opt depending on your income, subject to your tax purposes. Then you keep some cash, that is either UPM purpose or anything for normal transactions, depending on your things, and housing, rent and everything, about 30% to 35%. I'm talking just to before you get your kids, then automatically some percentage would be changing. Knowing and unknowingly, that will be changing automatically. So that's why you should have some three things. One is the liquidity, safety, and profits. But naturally, a bank thinks, an insurance company thinks, a manufacturing company or IT company. So when we try to all these, the second option, the insurance, I told that subject. The third, you go for some public deposits, like in the banks and post offices, because mostly the credit guarantee, insurance guarantee, there is something up to some amount only for a person in a bank account. So you have to see that also. So because there you find some liquidity on emergent basis, you can draw, you can take your loan from your deposit without worry. The loans can be taken either against your insurance policy and the premium based from the premium amount and your fixed deposit. You need not borrow from anyone. So the fourth option is it's not the sequence I'm talking. It is up to your income level growing up. You can decide. Uh, we find it number of bankers, central bankers buy the gold also. India is also one of RBI. So our Indian consumers are also interested in having the gold. In that case, depending on our income, you keep 1 gram or half-gram coins where you can make it convert for the purpose of the future wealth or the where you find it net worth that may be coming every decade that goes 3 times. If you see on record, in 2004 that was 500 rupees. That is worthwhile now. You check it how it is very well today, right? Uh, so uh, that is the another option. The next, if your income is growing up, the fifth option is go for the slowly. You have to go for the your rewards are required. You have to take the risk. That's why I said the risk and reward. You have to navigate your investment. How much you can keep, how long you can keep it, when you want to withdraw. These are all the things that comes from the low level to the higher level of returns that you are expecting. So the quite definitely as the global the things are going up, whether you interested or not, the banks keep in other markets, your insurance companies keep in other markets, right? So they utilize this. Definitely, there is some part of risk at international level also. If the economies, neighboring countries are good, we are happy. If they are not good, there is an impact. That happens in the last 2.5 years. You just see the things what is happening in the globally in small wars, even the trade wars. For example, India, you take it, we have the uh, negative trade balance with good number of countries. If you just see last 2 years, 8 to 10 countries. So we need to improve our rupee. Stronger means we need to have more exports over the imports. The trade balance should be positive. So then our rupee will be internationally traded just like that of other foreign currency like USD, Euro, GBP, franc, and so on. So it takes time for us also to grow up our economy. See that line, but still you see in our next point I'm talking about. You go for the certain risk. So fixed income. In that case, you go for the investing on a regular basis where you want for future. For long term, go for the mutual funds. Subject to risk again. Risk and reward go together or go reverse, go equal. That talks about in calculating in a statistical tool like when we see the beta, right? How it is moving together with the market, stock markets, money markets. So these are all when they rise, the people are having more money, people raise it. So that's the reason when we are interested to have this particular things, we need to be careful with this. Some of them they may not like. So that's why they stick to this public provident fund. I see number of people when I go to the bank, when I see them, they keep on continuously keep it with the bank. They believe that. They believe the post office. So they are happier with that. So with this money, where it is going? Definitely going somewhere, the funded based as per SEBI regulation in India. So they keep again unknowingly in the market. So that grows equal to that of at least the inflation. Though it is a controlled 22 and 23 financial years in India. So that is the game of the interest rates and inflation and the currency risk, country risk. These are all happen. So the next, that is the point is the number 5 is mutual fund investment and the Mostly people go for the most of the broking companies are suggesting go for the SIP. Monthly you can keep wherever, whenever you are having, and those fund managers will manage your funds. Not only here, even employees fund from Canada is traded, going to be, they are getting the benefit, and that's why they invest. They're going to invest. They're already invested. So this happens. The cycle of recycling of keeping the funding in different things. The next is directly you can take the through your one of the brokers, get the investing in the equity market. First of all, you start with the IPO with a low things, then slowly you can go for the investment in the long term. Of course, that gives the higher return. The return is that. That's why what I say that all the time, you just navigate your investment surplus. When you don't require in the short term, you keep in the long term, like in mutual funds and equity market, where you need to find the risk. And then the most important, the next is the one home is required. I said what I see that the rear side of mine is the 29th and 30th floor of one of the flats where my son is also living in Jindal City, Prestige Jindal City, Bangalore. You see the so people are going for this high-rise buildings. So you keep one home where you like to stay, right? Of course, people are having a different option, going for the reality market. So that to be considered how it is happening when the prices are getting low. How do you know? You need to study and take the advice from the people, from your friends, from your these things. Continuously, you need to go through what is that, whatever I'm telling, you need to do. Even that small, I'm from the family business. My father and grandfather and all these are from that, but I'm not. I'm in the last 4 decades in the teaching area, that too in the accounting finance area. But still, I know little. I want to share here is one of the things. We'll continue the discussion on the fixed investment. Thank you.